Welcome all of you to this online workshop on how to make money in trading using the dynamic live stock market intelligence. Now, earlier in the webinar, you must have seen the different benefits of having this dynamic live. You must have also seen there are some very unique intelligence at work in this dynamic live, which always make sure that you get the right entries and right exit. But then today in this session, you will learn in detail. Now, when it comes to trading, now what are you supposed to do? What are the points that you have to keep in your mind while trading? Now, having said that, now once you subscribe for Dynamic Live and once you have installed Dynamic Live, and when you open it, this is how it is going to look. Now, in this, you can select any of your favorite stock or index by clicking on this favorites here. Now, once you have done that, there are two different charts that you're able to see. One on the right side, we call it as the intra-week chart. The one on the left side, we call it as the intraday 3 chart. In both these charts, there is this line, we call it as the long signal. If you are looking at the long signal in intra-week chart, we call it as intra-week long signal. If you are looking at the long signal in intraday chart, we call it as intraday 3 long signal. And before we start understanding the method when to buy and when to sell, there is a three important things that you have to understand here. One is the long signal has a character. It can change its color from green to red or red to green. So whenever it turns red, it means it is telling you that the trend is down. Whenever it turns green, it means it is telling you that the trend is up. By looking at the color of the long signal, you'll be able to understand it. And then we have these zigzag caution symbols. So whenever a zigzag caution symbol appear, it means it is time for the price to reverse. So temporary price reversals are identified by this zigzag. But you may have a question saying that there are so many symbols out here. Now, which one do we consider to be a zigzag? Now, for that, whenever you come across any symbol in intraday 3 or even in intra-week, what you can do is you can come look at the reason here. If it is a zigzag symbol, then it will be very clearly mentioned as ID3 zigzag, that is intraday 3 zigzag or intra-week zigzag. So by that you will know that it is a zigzag caution. Normally when a zigzag caution appears, we enter, exit from a trade, or sometimes we also avoid entry into a trade. So that is the reason. And then we have this long signal edge point. You can see here the price has been increasing. At some point it starts coming down, comes closer to the long signal here. Once again it reverses, comes touches this long signal here, and then again there is a small reversal. So this is the way we call these points. Whenever the price touches the long signal or comes very close to the long signal, we call them as the long signal edge points. Now, how to know whether it is a long signal edge point or not? Even for that, you can come look at the reason here. It is very clearly written even now as ID3 long signal edge. So it is referring to the latest long signal edge point that we have got yesterday. So these are the three things. Now, even the long signal edge point identify the temporary price reversals. So these are the 3 points. So when it comes to starting your trading, once again, as it is told in the webinar, it is just matter of 1, 2, 3 easy steps. First step, add your favorite stock or index by clicking on this favorites, and then come look at this action information. Whatever it tells you to do, based on that, simply place orders, start trading, and start making money. Now, in this action information, there will be very clear instructions that you will come across. What are the instructions? Let me tell you. Now, when the price is increasing, if it is a good point to buy, then it will be written as buy call option now. Later, it will tell you to hold call option. And later, at some point, it will be written as exit call option now. So when to enter, when to exit, it will automatically tell you. And then similarly, when the price starts decreasing, then it will be written as buy put option now. Later, it will tell you to hold put option. Finally, at some point, it will be written as exit put option now. So just by reading what's written there, you will be able to simply start trading, and without any efforts, you'll be able to start trading. So this is how easy it is. But then whenever it tells you to buy a call option or to buy a put option, there's one more important thing that you have to do, and that is to select the right strike price. So even the right strike prices are automatically selected here. So all that you have to do is, if it tells you to buy a call option, come look at this pyramid pointing upward, pick one number out of these three, that is your right strike price. Similarly, when it tells you to buy a put option, you can come look at this pyramid pointing downward, pick one number out of these three, that is your right strike price. Got it? So this is how you select the right strike price. Now, once you have selected the right strike price, just go ahead and do the trade. So whenever you do the trade, when it tells you to buy a call option or a put option, select the right strike price, get into the trade. Now once you get into the trade, wait until it is very clearly written as exit call option now or exit put option now for you to exit. So this is how you are supposed to trade there. And along with this, there is one more important thing that you have to do here, that is to secure your profit. Now, how to secure your profit? Let me show you a small example here. Let's assume at this point in time, it was very clearly written as buy call option now. Let us say you bought a 20,000 strike price call option in Bank Nifty at 100 rupees premium. Now, after buying it, as the price starts increasing, you can see here there are some series of symbols that keep appearing here. Now, these symbols could be a dynamic system caution or a DMBOTS. It appears only in the intra-week chart. Whenever these symbols appear, it means secure your profit. If you are in profit, then secure your profit. Now, how to secure your profit? Let me tell you. At this point, we buy a call option at 100 rupees premium, that is a 20,000 strike price. As the price started increasing, right on top, there is a symbol here. Now we have to secure our profit. Now, when we have to secure our profit, when we look at the premium, it is now trading at 250 rupees. Let us assume we bought at 100, now it is at 250. So to secure the profit, what we do here is first we sell it off, sell the call option, exit the call option. We will sell it at 250. So bought at 100, sold at 250. So we have gained 150 points and our initial capital is also back. Now, what we will do is out of this profit that we have gained, part of the profit we will reinvest and buy another call option. So part of the profit, like from 150, we will let us say we will go buy a 21,000 strike price call option at 50 rupees premium. So what is happening is from 150 we have reinvested 50 points. 100 points is still there in our hand. It means that is our secured profit, guaranteed profit. But the remaining 50 rupees that we have invested, the worst thing that can happen if the price starts coming down, the worst thing that can happen is the 50 rupees premium can become zero. But if the price did not come down and if it started increasing, then the 50 rupees premium will increase and grow beyond 100 or 150 or whatever it is. So we will make more profits. So this is how one can secure your profit. This process we call it as shift over. So whenever I tell you to shift over, it means I'm asking you to secure your profits. So you can exit your trade and move on to the next strike price in the same option. Now, when you do that in this process, you reinvest part of your original, part of your profit, or you reinvest part of your initial capital. So this is how you can secure your profit doing this. So whenever the action tells you to buy a call option or a put option, just go ahead, do the trade by selecting the right strike price. Any symbol appears, then shift over to secure your profit and wait until it tells you to exit call option or exit put option. When it tells you to do that, then you can finally exit the complete trade itself. Got it? So this is how one can trade. There's a very easy, simple process here. Anyone can implement it. Anyone can make money following this. So this is all that you're supposed to do. So first decide what is your capital. Based on your capital, select a quality stock or an index and trade the same script for one entire month. That is the easiest way to trade. And when you do that, when you blindly mechanically implement this concept for one entire month, we expect you to earn a minimum of 10 to 15% returns at least per month on your overall capital. So this much is very much possible, but then when you are implementing it, there are times you will come across lot many trades during the whole month, and in all these trades you will see that the results are something like gain gain minus minus gain gain, or it may also start off like minus 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 gain gain, right? So whatever happens, just make sure that you implement it for one entire month. When you do that, eventually you end up with a minimum of 10 to 15% returns. Got it? But then there are people, when they see a couple of minus trades, they panic, they stop trading, they change to something new. So when you keep doing that one or the other way, you'll end up winding up your capital. But the right thing to do here is to first follow some discipline. We call this as a money management. So how to do money management in options trading? See what is your capital. For based on your capital, utilize only 10% of your capital per trade. So here was an example where I told you that we will buy a call option at 100 rupees premium. So one lot of Bank Nifty is 20. So 20 into 100, we are talking about 2,000 rupees investment. Let us say my capital is a lakh rupees. Out of lakh rupees, I will reinvest, I will invest 10%. That is 10,000 rupees. That is my allocation. So with the 10,000 rupees, I'll be able to do 5 lots, isn't it? Per lot, it is 2,000. So I can trade 5 lots in this particular trade. So this is how one can go about trading in, using this Dogmatic method. Very easy concept. So when you implement it for one entire month, the result is always yours. But then when you start implementing it over a period of time, you will also understand that now earning 10-15% returns has become a habit. Now, is there anything more that you can do to increase your returns? Let me tell you, using this dynamic live, one can trade in multiple ways in order to secure more returns. But then today we are discussing only about the Dowmantic method level 2, and there are just two more other steps we will discuss in order to increase your end results. Got it? So let us move on to the second step. Second step is also very easy. Whatever we discussed in the first step, we will do the same thing here in the second step. But before we do the trade, there is one small addition that we will do here. Whenever the action tells you to buy a call option or a put option, check what intraday 3 long and intra-week long signals are doing. Okay, let us assume tomorrow the price starts coming down. When I say tomorrow, the next trading day, the price starts coming down, and at this point it is very clearly written as buy put option now. So when it says buy put option now, all that you are supposed to do here is just check intraday 3 long signal, intra-week long signal, and if they both are red in color as it is now, intraday 3 long is red in color, intra-week long is also red in color. They both are red in color means they both are telling you that the trend is down. In a downtrend, you're planning to buy a put option. That is the right way to trade. That is the best way to trade. So no thinking, no guessing, just go ahead and do the trade. Right? Because your trade is in favor of the trend. So just go ahead and do the trade. Got it? But then there are cases where you will find situations like this. At this point yesterday, at around 2:30 in the afternoon, it was very clearly written here as buy call option now. So when it said buy call option now, we checked the intraday 3 long, it was red in color. We checked intra-week long, that was also red in color. It means they both are telling you that the trend is down. It means you are planning to buy a call option, so it is against the trend, isn't it? So it is a mismatch. It is not matching, isn't it? So the same way, some cases one long signal will be green, the other will be red. It doesn't matter. Even if any one of these two long signals is not supporting you, it means there is a mismatch. If there is a mismatch, before you do the trade, you must go check some other script. So if you're trading in Bank Nifty, as I told you, if you're trading in Bank Nifty, you must go check what's happening in Nifty. Right? So this process, when you're trading in one script, going and checking some other script to take a decision here, this process we call it as the Tenkai signals. We call it as Tenkai signals. Okay. So if you're trading in Bank Nifty, then Nifty is your Tenkai signal, or if you're trading in Nifty, then Bank Nifty is your Tenkai signal. So what do we check? What do we do here? So when it said buy call option now, at this point in time at 2:30 in the afternoon, since there is a mismatch here, we will go check Nifty, and in Nifty we will check at the same time, is there any zigzag on top? Is there any long signal edge point on top? This is what we will try to check there. If it is there, then we will avoid this trade in Bank Nifty. If it is not there, then we will go ahead and do the trade even if there is a mismatch. Got it? So at this point 2:30 exactly, we went and checked Nifty. Let us see what was happening in Nifty. So this is at 2:30 in the afternoon. You can see here the price is not touching the long signal. There is no zigzag symbol on top. Even in intra-week, the price was not touching any long signal. There is no zigzag symbol on top. Nothing is there. Since nothing was there, we went ahead and we did the trade. We bought the call option in Bank Nifty even if there was a mismatch, because in Tenkai signal, that is in Nifty, there was no zigzag, no edge point on top. So that is the reason we went ahead and did the trade. But if there was a zigzag or edge point, then we would have avoided this trade in Bank Nifty. Got it? So this is all. This is how you are supposed to trade using the second step. So if you can follow the second step and implement it for one entire month, now what will happen is in comparison to the first step, you will see that there are many trades that you will be able to avoid in the second step, because you are looking at the Tenkai signal whenever there is a mismatch, and if there was a zigzag or edge point, you're going to avoid the trade. By avoiding the trade, you will see that if you had done the trade, maybe the trade would have eventually ended up being a minus trade, but anyways you have avoided the trade, so you have been able to successfully reduce the number of minus trades. So compared to the first step, the second step will help you reduce the total number of minus trades. So when you can reduce the total number of minus trade, it means that your returns will increase, your balance will increase. So if you can follow the second step consistently for one entire month, we expect you to earn a minimum of 20 to 25% returns at least per month. Got it? So this is how one can benefit from the second step. Now when you start implementing the second step, when that also becomes a habit, now you will start thinking, is there anything more that we can do to increase the returns? In such a case, that is when we will go on to the third and final step. In the third step, now first thing, if you have understood the second step, then third step is very, very easy. All that you have to do, whenever the action tells you to buy a call option or a put option, before you do the trade, check intraday 3 long signal, check intra-week long signal to see if they both are supporting or not. And also check one more thing, the third one, that is dynamic system. Right now, dynamic system is another intelligent platform like Dynamics Live. It is given installed free for all of you who have subscribed for Dynamic Live. So we use a dynamic system to do positional trading in any stocks or index, futures and options. Now, how to do positional trading? There is a very clearly defined method. We call the method as the level 2 trading method. Now, as per that method, what is your current position? This is what you are supposed to check. Are you supposed to be holding a long position, or are you supposed to be holding a short position? This is what you are supposed to check as per that level 2 trading method. So let us say tomorrow the price starts coming down. Now when the price starts coming down, if intraday 3 long signal is red, and intra-week, when the price starts coming down, if it tells you to buy a put option, and at the same time, if intraday 3 long signal is red, intra-week long signal is red, it means they both are saying that the trend is down. They both are supporting you. And at the same time, also check dynamic system level 2 trading method. As per that positional trading method, if you are holding a short position, it means that is also supporting you. So all three of them are supporting you. So no thinking, no guessing, just go ahead and do the trade. But some cases, what will happen is in intraday 3 long signal is supporting, intra-week long signal is supporting, but dynamic system level 2 trading method is not supporting. As per that, we are supposed to be holding long position, let us say. So when that happens, now there is a mismatch, isn't it? Because dynamic system is not supporting. You're planning to buy a put option and it says you're supposed to be holding a long position. So once again, now there is a mismatch. Now since there is a mismatch, the only thing that you're supposed to do here is go check the Tenkai signal. The same old procedure, go see what's happening in Nifty and Bank Nifty. If you're trading in Bank Nifty, go see what's happening in Nifty. And if there is any zigzag or edge point, then you can avoid the trade. If there is nothing, then go ahead and do the trade. Got it? So this is all that you're supposed to do. In the third step, if you can blindly follow this third step and implement it for one entire month, now what will happen is you will see that the number of minus trades will drastically reduce compared to the first and second step. And when it reduces, then automatically your balance will increase. So we expect you to earn a minimum of 30 to 40% returns at least per month. Got it? So that is a major benefit. And even with a small capital, if anyone wants to start trading, then I would always suggest to trade as per this step 3 method that we have just discussed. And along with this, there's one more important point to complete this step 3. For that, I'll have to open dynamic system. Let me open dynamic system. So this is dynamic system. In this dynamic system, you can see here, I've opened a daily chart of Nifty. These are all the price movements. Now, along with the price movement, there are 3 lines. One is a black line, we call it as speed trend. The other is a green line, we call it as mid trend. The third one is a purple line, we call it as a long trend. So whenever the price is trading below all 3 lines, it means it is in a clear downtrend. Whenever the price is trading above all 3 lines, it means it is in a clear uptrend. But there are cases when the price is trading between the 3 lines. Now there is a situation we call it as in between trends. So whichever stock or index that you're trading, and if it is an in between trend as per the dynamic system daily chart, then whatever trading opportunity that you get here, if it tells you to buy a call option or a put option, for every trade you must check the Tenkai signal. Even if there is no mismatch, you must still check the Tenkai signal to decide whether to do this trade or not to do this trade, just because it is in a clear in between trend. Got it? So this is all that you're supposed to do. This completes the third step. So if you can follow this much, then you are here to make some consistent profits and massive profits, earning 10-15% returns, so minimum returns. Maximum it could be any other number. Minimum 10-15% returns or minimum 30 to 40% returns, whatever it is, go. All these returns are huge returns, Only thing for you to earn consistently, you just have to implement it as it is told. Okay. Now, for you people to learn about the dynamic system level 2 trading method, now there is a training video in the members area under the menu training 2020. Now, all those who have subscribed for this dynamic live, you will get access to the members area. That is, you will be given a password. Just use that password and your email ID to log into your members area. Once you have logged in, there in the menu you will find the training 2020, and there you will find the training videos related to this dynamic system level 2 trading method. So watch it to understand it better. Got it? So this is all about today's session. If anyone has any other questions or doubts, you can ask me now. All right, looks like there are no doubts. So gentlemen, thank you all for joining today's session. Wish you all a happy trading and a very good evening. See you on the other side in the next session. Until then, good day. Thank you for joining.